I can sort of get a. You've got all the companies that were presenting there. There's a list
Yeah.
there. So what I'm going to do is I'm going to try to click through my screen share fairly consistently when we're talking about something.
Okay.
So, for example, if we talk about a stock, I'll get a chart up there. If we're talking about price of gold or whatever.
When we're talking about something.
Oh, oops. I'll try to get something up there, Eric, so for the audience to see.
Okay.
Just bear with me a second or two more here. Okay. Perfect. I think we're ready to roll here. There we go. All right. I know where. Let's go to there. Okay. All right, Eric, I'm going to get started here.
Okay.
Good afternoon, ladies and gentlemen. Thank you very much for joining us. It's Alan Barry Laboucan here. I'm the founder of the Alan Barry Reports and the host of this show. I've got an exciting guest, Eric Coffin from the Hard Rock Advisors is on today, advisory. Eric was not long ago in Toronto, so we're going to have some stuff to talk about. Eric, thanks for joining us.
Well, happy to be here. Thanks for having me, Alan.
Great, Eric. I was thinking we've got a good amount of subjects in the Federal Reserve, recent action, U.S. dollar, stocks, gold. So but before we get on to that, Eric, you know the routine with my start of my show. I like to say a little bit from my sponsors. Premier Gold, PG on the Toronto Exchange has a wide range of projects from exploration in Red Lake, Ontario, and in Nevada. That's happening right now. They've also got advanced stage projects, a mine in production in partnership with Barrick. They've got a really good group of projects there to grow off of. PG is their symbol. As I said, another sponsor is Wolfden Resources. Wolfden stock symbol is WLF. They're involved with high-grade exploration in Manitoba, just outside of Snow Lake, and they're hitting some good results. They're drilling there. And then my final new sponsor is West Red Lake Gold, RLG, on the CSE. And they are drilling, or they recently had some drill results out from their Red Lake project. So, Eric, of those threes, which one are you watching? And maybe you could have a quick little blurb for each of them.
Well, I followed two of them in the newsletter. Premier, I followed, well, forever, pretty much. Ever since the original Wolfden, not to be confused with the new Wolfden, was taken over and PG was spun out of it. I've got, as most of us probably do, I've got plenty of time for Premier's chief cook and bottle washer, who's a brilliant guy when it comes to putting deals together. He's put together a lot of very impressive deals into that one corporate holding, and I think it's one of those ones where with a gold bull market, I think it's a fairly safe deal for people that want to get their toe in the water. I don't think you're
Yeah, it gets too
road.
soft in there. Yeah.
Yeah, your roads just get wrecked if you're in there too much street breakup. So I'm sure they're gonna wait till May, I assume.
Yeah, I think the reaction is, I think it's a combination of things, Eric. I think it's probably the market's appetite for a good exploration project, but I think how you define a good exploration project is what makes it even more interesting. Red Lake, Ontario, Canada, all the safe mining jurisdiction kind of side of things. And then you've got an interesting target there that sort of has all the bells and whistles of a Red Lake target. So, it's very similar to what I see happening with Wolfden, actually. Similar kind of story. Chasing after some high grade there in a well-known camp. Hit some good things in the early stages of the holes, and they got a lot of exploration left. But that's what sort of makes the romance these days, Eric?
Mm-hmm.
And we need a little more romance in the market these days.
It's been a long time since early stage explorers have been able to raise money, and one of the most gratifying things in the last couple of months, other than the fact that my own brokerage account looks a little less ugly, is the fact that you're seeing money flow in again. I mean, every time you get one of these long bear markets, and I think you and I have both been through 3 or 4 of them, you get to the end of one of these things, and everyone's convinced that even if everything changes, the gold price goes up, and there's all kinds of love that it's going to be 2 years or 3 years or 10 years or whatever, until sort of early stage, mid stage stories can start raising money. In my experience, it always actually happens a lot faster than people think. When it turns really fast.
The thing though, Eric, I think is a little bit that the speed that it can turn, I think is kind of challenged because, I'm looking every day through news releases, and there's just even, I wrote a piece about it. I called it the PDAC news indicator or something like that. You can't just all of a sudden get people excited because the market turned, right? And you can't just all of a sudden make drill results happen because the market turned. I'm still having a hard time finding news releases, and so I'm kind of still in the boat that even though I think we're going to have a pretty significant recovery, I think it's just fewer companies are going to participate. Because the other thing is, Eric, now when news breaks, we're dissecting that so quickly that the more iffy stories just can't get out because there's just only so many companies under the microscope.
Yeah, I mean, I think I don't think we're in a market yet. I don't think we will be in a market for, I would think, at least, even if everything goes our way, I think it's at least a couple of years before you're in one of those rising tide lifts all boats sort of markets. I mean, everybody's being burned. Everybody's going to question every release, I think, that comes out, and the number of companies that are truly positioned. By truly positioned, I mean they've got a decent share structure. They've got a management team that knows how to get things done, and a management team that can raise money or that already has money. The list of companies that fits that description is significantly shorter than the list of junior explorers on the market. I mean, there's 1,000 junior explorers around, and maybe
sometimes that number 1,000 gets thrown around, but the reality is that there's only probably a few hundred of them that are relatively serious. Probably 150, 200 are serious. The rest are just paper hangers, not really anything going on. So, but I wanted to talk a little bit, Eric, about the last time you were on, and a few of the companies that we talked about. Those were we talked about GQC and PRG sort of together.
Yeah.
And I wanted to see if you had any updates for us on how those are progressing, Eric.
I think things are moving forward. The last I heard from Bill Fisher, their timing for their pre-feasibility study was May. it's a little sooner than that, but who knows? I mean, I'm not. It's usually not a good idea to assume the engineering stuff's going to show up early, so let's not. They just announced a $3 million financing. I know at 20 cents, no warrant. The no warrant part was nice. That should give them enough money to get all the way through pre-feed and feasibility, and I believe will leave some left over for exploration drilling that I sincerely hope they're going to do this year. I think that's part of the plan. They have crews out right now doing a very extensive IP survey, and IP is what worked in terms of making the Romero discovery. They've got a lot of ground that they've just finished mapping, and the fact that they're doing that extensive IP survey tells me they liked what they saw on the surface. So I think we're going to see some new drill targets generated there. PRG also has guys in the field. There's been three or four geos went down from Canada. I don't know, about 3 weeks ago, I think, and they picked up a bunch of guys in the DR, and they're out in the boonies right now. They've probably got another week or two ahead of them on that work program. And Mike Moore, the VP exploration for PRG, had I believe 15 separate areas he wanted to look at that came out of their own work, and this data compilation deal that they've got with Goldquest, where both companies dumped everything into a database to use it to help target. I don't know whether he hits all 15 of those spots. I mean, some of them are kind of death marches from the road, but I'm assuming he's going to get to most of them, and hopefully they too will come back with 2 or 3 more drill targets to add on to the Ginger Ridge one they already have.
Well, I think what makes that a little different than most, surface sort of exploration projects, Eric. Well, one, they can do it relatively, cheaper. But when you kind of got the model there and you're just going out to try and repeat and rinse and repeat, and you get the hints that you've got another spot to repeat on, it gets a little more attention than if you're just out there sort of trying to develop a new grassroots project.
Yeah, I think both companies, and Goldquest particularly, that they've spent a lot of time modeling their past results, trying to get their head around, what is Romero and what's the best way to find it. But I really think they've settled on mapping, try to use mapping to find hydrothermal systems, use some surface sampling, and hope you pick up some gold and copper numbers. Although I think both Goldquest and Precipitate would tell you in that environment, you can't necessarily count on any kind of boom numbers at surface. You might get lucky, but you're basically trying to find the tops of these systems, and then IP is what helps you really zero in on where the high sulfide stuff is, and then as I know you love to say, it's the truth machine.
I pound that one out there pretty regularly, Eric, because it's what my whole thing is about, right? I've always been about trying to have investors focusing on what's important in the companies that I follow, and that always gets back to the drilling and what's coming out of there, and that has a way of separating truth and reality and hopes and dreams and all that, right? So another company we talked about on the last time you were on, out of our sheer guilt, and it was LIX, LIX. We had to talk about our friend Tommy's big company. They've had a couple of real good news releases out since we last spoke, Eric.
Yeah, I thought the deal to pick up the project in Argentina was pretty smart. I've always been like, I don't follow it in the newsletter, but I've always been a little bit leery about what the situation might be with water rights in Nevada.
Mm-hmm.
You've got to deal with water rights in Argentina and Chile as well, and any of the basins down there. But it's it's a well understood process, and it's doable, and that's a fairly large resource that's been at least partially defined down in Argentina. And the fact that those guys could turn around and execute a fairly large placement above a buck was impressive, to put it mildly. I mean, it's that's where really
Yeah, and I think Brian, has a lot to do with the whole building of it and trying to structure it properly. And yeah, I've sort of I wanted to remind you, Eric, as you've been talking, I've been sort of fiddling through websites. So you talked about GQC there, and I had them up, and I've just got and as you're talking about the news, I bring that up. So I pulled up the news release here of their press release on the new project in Argentina, and then they also had news out recently of the financing, which you also mentioned. So yeah, they definitely are getting in a better position. So good on them. Now I wanted to shift over, Eric, into some new stuff. I'm going to pull your website back up here, Eric. The Federal Reserve had, I was going to say we were going to talk about the actions of the Federal Reserve, but they really didn't have any actions. What do you think of the recent move or lack thereof?
I thought it was quite interesting. I think, to some extent, I think Yellen actually managed to surprise the market a little bit. I don't think anyone was really expecting her to do a rate increase. I mean, I commented in the journal I sent out a couple of days ahead of that if the Fed was actually going to follow what it claims to follow and base its decisions on the metrics that it claims to base them on, they would in fact be doing a rate increase. But I also said I didn't think they would do it because they didn't have the stones, not to put too fine a point on it.
Yep.
And I don't think the market really expected a rate increase. I think people were a little bit surprised that they actually came out a bit more dovish. And I don't know how much of that was Yellen trying to counteract what had happened a couple of days earlier. The European Central Bank came out extremely dovish, increased their QE program, cut basically all of the interest rates that they've got control over. And I think some of that may have been Yellen trying to put a lid on the dollar index, which as I expected topped in December, but she may have had some concern that it was going to start going the other way. And she seems to be, for someone who claims to be talking about how great everything is, I think her whole dovish slant was a bit of a surprise to everybody. You get the impression that they're concerned about some things, and one thing they don't seem to be concerned about, which I think was surprising to people, was there's been a bit of an uptick in inflation. I mean, no big deal. It's still below their target at 2%. But assuming the oil price keeps going up, I'm not sure I buy into that. But assuming it does, we should see both the CPI and the PCE, the personal consumption expenditure deflator, which is their preferred measure. They should both climb a little bit. And again, based on those things, her dovish stance doesn't seem to make a lot of sense. The way I read that was Yellen has decided, or the Fed has decided, the doves won the argument, if you will. They've decided they're going to be behind the curve intentionally. That's a very good thing if you're somebody that trades resource stocks and commodity stocks and gold stocks, because historically the periods where gold and most other metals trade best is periods where central banks are behind the curve intentionally or accidentally. And basically what you end up with is negative interest rates. And negative interest rates are a big plus for commodities. Of course, most of the world officially has negative interest rates right now.
Yeah,
in terms of real interest rates, the Fed will be there fairly quickly if they don't raise rates, and we see CPI tick up even a little bit. The Fed rates will effectively be negative too. So that's good if you're a gold guy.
You know what I've seen since the Fed. I mean, we talked last time about it being sort of a painted into a corner kind of scenario for the Fed. They really can't raise interest rates. They really don't want to lower them because then you're going to go below zero. But you can certainly see it in the currency market just a couple days prior to. I've got right now the chart up, and I'm circling the couple days prior to the meeting. It was on a pretty significant decline in the index, Eric, and then it kind of popped, it kind of stabilized afterwards, and now in the last couple of days has been trying to trade upwards of that. But it doesn't look very convincing when you've just went down on an elevator, and now you're not going to go up on an escalator. Down on an elevator, this looks like a bit of a head fake move to me, and I think we've got more downside in the U.S. dollar, which is obviously good for the U.S. Or the gold price. Where I've been a little, let's say, not as confident with what I'm seeing in the trend is in the U.S. stocks. I'm pretty confident with what I'm seeing in the U.S. dollar, Eric. To be bearish on that, I think is a smart move. I've now pulled up the S&P 500, and we see a different scenario. Why don't we talk a little bit about that, Eric?
Yeah, I'm one of those guys who expects, a bear market sized pullback, 20% plus from the highs. The highs were 2140 or whatever it was. That call's looking a little bit sketchy at the moment, obviously, and I'm sure there's plenty of your listeners rolling their eyes as I make that comment. Fair enough, but one thing that I would point out that it's important to recognize when it comes to the S&P is Yellen's moves last week were obviously a big help. I mean, they gave it an extra push, and it may be that guys on Wall Street are so convinced that the Fed's going to have their back again, as they have so many times before, that they just push this up to and maybe through new highs. I'm personally a bit skeptical that's going to happen. It is impressive the volumes are starting to lift again, so maybe we'll get that happen. But there's two things coming. One is the next earnings season starts in about 2 weeks.
That'll be a catalyst. That'll be a catalyst for another slip down, Eric. And I'll defend your position because I'm in the same camp, and I do see some things on a technical. We had that big dip at the beginning of the year, which is usually a very ominous sign for the rest of the year based on the January effect. It got a little bit of a blip up at the end of the month. So then it had another pullback. Then it had a pretty good recovery from around that 1825 level now to 2042. But Eric, I'm watching, these indicators and these moves, if it doesn't, I don't see how it trades above the last significant set of highs. And if it fails to trade above that, I think we're on the verge of another pretty significant downtrend for the U.S. Stocks, and it's not coincidental that we're coming up on quarterly reports, which will, I think, be a serious catalyst to more downside, not upside from here.
Well, I mean, when you look at when you read stuff coming out of Wall Street about things like valuation levels, it's important to recognize that the standard reporting or the standard script, I guess, on Wall Street, when market strategists on Wall Street are talking about valuation levels, they're invariably referencing 12-month forward earning projections. Right now, I prefer to be looking at 12-month trailing actual earnings.
Exactly.
Rather than projected earnings.
And if you look at that, Eric,
based on actual earnings, we're at about a 23 PE right now.
Which is historically right at the top.
Yeah, it's pretty high. I mean, average historically is about 15, 16. The other thing to keep in mind is we've had 3 quarters of declining earnings now. I think odds are fairly good that we're going to get 4 before the next quarter is finished. I mean, we might get a little bit of help on the oil side, but I mean, there's this conviction on Wall Street that all of the earnings decline was about oil, which wasn't true. It was also about financials. It was also about materials, some of the retail stocks, the healthcare stuff. There were several sectors that had declining earnings. It wasn't just oil. But the other thing to keep in mind going into this earnings season is when you get to it's usually about importantly, you will not see companies executing share buybacks. Share buybacks have been a very major part of the demand on the stock side. If you look at the supply demand over the last year, retail traders like mutual funds, for instance, have been net sellers for several months now. There's been net buying in the market, but that's almost entirely due to share buybacks. So if we're going into a 1-month window where those share buybacks aren't going to be coming, and we see some negative earnings surprises, if you want to call them a surprise, it won't be a surprise to me if they're negative, but let's call them a surprise, be polite. I think, to my mind, notwithstanding how strong the S&P looks right now, I think the balance of probabilities is it's going to be lower at the end of April, not higher.
Well, I'm thinking that I always like to put into context the earnings valuations relative to the earnings growth, and you're looking at single digits, low single digit kind of earnings growth. That is an extremely risky scenario when you have the valuations, as you said, at 23 times backwards earnings, and the forwards looking ones don't look that much better. I wouldn't want to be too long stocks in the US right now, or USD. I make that point pretty clear fairly regularly, but I'm going to now switch to the gold chart, Eric. And it'll be the 1-year gold chart.
Okay.
So we've what I've been noting a lot of in my reports has been that decline we saw, the end of the decline, let's say in December, and then a bottoming and a recovery in January. I think we've created at the end of a bear market, we created more of a cup type bottom. But the chart is what the chart is. I don't try to fight it too much. Then we got a handle, and since then we've kind of broken out of that handle, and we're now trading above that, on the upside of that handle. What are you thinking about the trend in gold these days, Eric? I'm continuing to be very bullish throughout the remainder of the year.
Yeah, I think we put in a bottom finally at the end of December. I mean, I'm viewing this as a new bull market. I think it's a bull market that's going to have quite a few legs. I mean, should we expect some more sideways or movement or a bit of consolidation? I mean, it certainly wouldn't be surprising given how strong things were. Although the last 2 or 3 weeks seems to have worked off a lot of the overbought condition. I was talking on CEO chat with Jordan Roy Byrne, who I think who does the daily gold report. And he and I were talking about the commitment of traders reports, and I'm kind of agnostic when it comes to those, but I know that's something a lot of people trade on. Those are published every week. It's basically shows you the positioning on the COMEX exchange, and there's a lot of concern about how much the commercial hedgers have increased their short positions. But I mean, as I like to point out, I mean, hedgers, most of the commercials are in fact hedgers. They're not speculating. These are people who take gold into inventory and then resell it, and their main concern is ensuring that the price they sell it at is higher than the price they buy it at. So they're happy enough to put on hedging transactions and short transactions to ensure that. And if that means they just let some of these forward contracts die and eat whatever the cost is, it's worth it to them to do it. And where I'm going with that is that you gotta understand that bear markets and bull markets trade differently. I think we switched from a bear market to a bull market for gold, so I'd be careful about reading too much into things like that, because what was a truism 6 months ago or a year ago, where if the commercials get up to this level on the shorts, the gold price has to fall. So that stuff all changes when you get into a bull market.
You make a very good point there, Eric, that I have been kind of mulling about lately, and you can't fight the trend. And, just because in the past the trend did this or that, yes, maybe this time it will do that, or maybe it'll do something different. What I think you have to look for is, what is the trend we are seeing today? What's the one that's affecting us now? Not what happened in 1979 or 83 or 2007, because this time it might be different, and so you have to watch things and sort of try to find which trend are we actually dealing with here, and which one's the reality that is actually moving the market. I would say that a cup type formation trend at the end of a 5-year bear cycle might not be what you would expect, but it is what we got. So that's what I've been reporting on, because I report on the trends that I see. I can't make the trends. I got to watch the trends. And so I think that that's a really good point you made there, Eric, that, you got to deal with what you have today.
I think so far. And then, we're all of us that have been through a few of these things, we all get paranoid, especially after PDAC. But, so far I'm impressed at how well things are holding up. And I think there's a message, there is for me anyway, there's a message in how well the gold indexes, and by that I mean the gold equity indexes, seem to be holding up as a group. I think part of what we're seeing, and it's not really surprising if you think that the bear market for gold's over, this is what we should be seeing, and that's essentially that we're seeing what I call outside money coming into the sector, and by that I mean not the usual players, not the guys that have been in this sector all along. The buying is largely coming from outside players, probably guys that blew out their gold stocks 5 years ago and haven't really looked at it seriously since, until say the last month or two. And if you look at a 5-year, and I sent out an alert a while back, and I was comparing a short-term chart that looks I would agree, it looks pretty scary. I mean, it's a pretty steep climb from the middle of January to now. But then I put beside that, I put a 5-year chart of, I think it was GDX, and said, if you're one of these generalists who's been out of the gold market but who's putting their toe back in it now, this is probably what you're looking at. And that what to us looks like this huge rally doesn't look like much of anything on a 5-year chart.
That's what I
lived off the bottom, but it's not really that impressive.
I noticed. I was saying the same thing mentally when I was reading Clive Mond. I guess he's I don't know Clive from Adam, but his name gets brought up. So I recently been looking at some of his stuff, and I was thinking exactly what you just said there, Eric, about what's going on.
Clive's got a pretty good track record, but he's a chart guy. He's pretty much pure is probably too strong a word, but he's a fairly pure technical analyst, and he does different time frames, but he's a trader, so his time frame tends to be short. So he's looking at the short term chart and saying, this thing looks like it should roll over.
Yeah.
Because it does look steep and scary when you look at a short term chart.
Yeah, it does look like a parabolic move, but like you said, you put it into the context of a 3 to 5, 10-year chart, and you start to see that, well, actually, this is just a little blip at the end of, what's been a long decline since 2011 top.
Yeah, we're barely right now. The Toronto Gold Index, for instance, is sort of back where it was. It had a run at the start of last year, which was over, I think, by the end of January. It's not even quite at the top of that move yet, and that move is about a third of where it was 4 years ago. So it doesn't look that special on a 5-year chart. It's a nice move off the bottom, but it certainly doesn't look like anything that dramatic.
Right. Eric, I'm going to pull up now your you were in Toronto. You didn't actually stay for, I think you're only at the PDAC for 1 day or something, but you had your conference, your subscriber conference, and what I've got up there on the website, if you go to subscribersummit.com, their last one was on the Saturday of the PDAC, and I've scrolled down here, Eric, and I've got the presenting companies now on the screen. So how was your conference? And let's chat about some of these names on your presenting companies list here.
It went really well. It was basically standing room only. We had a lot of great companies there. Tommy and Keith brought in some really interesting guest speakers as well. I mean, the presentations were quite good. I mean, I think over the next few days, you'll start seeing the videos pop up, because I think the videos of all of these presentations and of the guest speakers have all been finished now. But, there were, several quite strong. I mean, obviously the energy companies are key, so I'm not going to, I don't know enough about most of those to comment on them. That would be Keith's job. But the hard rock guys, it was quite a strong group of companies, and their presentations, by and large, were very well received by the audience.
Good, yeah. Oh, sorry, I got the wrong screen up there, Eric. I'm gonna get back onto the screen share. I did notice what I'm gonna do is I'm gonna just pop the names that stick out to me, Eric.
Okay.
One is Next Gen Energy. Next Gen Energy has had a lot of success out of their project in Saskatchewan. What did you garner from their presentation, Eric?
Lee gave a good presentation. It was a little bit on the long side. Yours truly almost grabbed the mic away, but I decided to be polite and let him go. But he made a very strong argument for the fact that, notwithstanding how impressive the resource they just put out is, and it's damned impressive, 200 million pounds of uranium. There's room for that resource to get a lot bigger. I mean, I don't think anybody would disagree at this point that that's likely to be one of the best, and perhaps at the end of the day, potentially the best uranium discovery ever made. I mean, it's an extremely impressive property.
Yeah, their resource.
There's lots and lots coming. I mean, a lot of these amazing drill holes people have been talking about the last 3 or 4 months, none of those are in that resource. I mean, those will still need to be added in. I mean, that sucker's going to be very, very big by the time it's said and done.
Well, and they blew away the street estimates. I think I had the resource maven there, Gwen, on the show, and she was saying that the estimate for their first resource calc was about 125 million pounds, and they came in with more than 200 million. And as you say, they still have a lot of high grade and step out holes to add into that resource. So yeah, this is a monster getting to be a bigger monster.
Yeah, no, it's going to be very, very large. I don't know who the buyer is going to be for it. I mean, that's the one question I have.
But someone's going to.
Somebody will be. I don't know who it's going to be, but I wouldn't be surprised if you see a deal at the end of the day, whatever that is. And I'm not expecting anything tomorrow or anything. You may see, because unless things have changed, and they haven't, as far as I know, a foreign buyer can't come in and just snap up a majority of one of those projects in Saskatchewan. But what you could see is a consortium of 2 or 3 companies, and like the obvious candidates are like the Koreans, Chinese, end users essentially, who want to have assurance of supply of uranium, aren't particularly interested in operating a uranium mine. And there are several of the mines currently operating in the Athabasca like that, where the Koreans or the Chinese or the Japanese will have, say, 5 or 10 or 15% of the mine. They might have put up 20 or 25% of the capex, but what they really wanted was assurance of supply. They want the output. So I wouldn't. You might see something like that in combination with, say, one of the really big mining houses, because I think when it's all said and done and this thing goes, it's not going to go very cheaply.
Yeah, well, the word world class gets thrown a lot around in Vancouver on House Street, but that certainly is a world class deposit, and I think it will be a mine that some major is mining in the not too distant future. That was one company had there. Lithium X was also there, but we already talked about them. Nova Copper, high grade copper up in Alaska. You following that one, Eric?
I don't follow it, but it's one that I'm watching fairly closely. I mean, I really like the project. I mean, they're extremely impressive high grade copper projects. I mean, I think the trick with that one is just, it really comes down to how patient you want to be. The company's very upfront about their scheduling. They've got to they've got to get through the permitting process. They also have to get through what they're permitting right now is the road, because there's a fairly large chunk of road is going to be required to get the thing over the finish line, which is unusual for Alaska. I don't think it's a particularly difficult road to build, but they do need to permit the route. They have very good relations locally at a political level. They have very good relations with the local native corporations that are partners in the project. So I don't foresee any problems at that level. I think that's a project that's ultimately going to be very valuable. It really just comes down to how early you want to be on it. I think if you're a patient buyer, it's something I wouldn't be afraid of for sure. I mean, the projects are awesome. Like they're very, very impressive comparable.
You know, I just watched an interview of James Qantas from the PDAC with Rob, the CEO,
With
Rick Van Nieuwenhuizen, sorry. And one thing that Rick highlighted is that regarding that road, it's actually the First Nations group that does the permitting. They're not involved with the permitting of that road. So I think that's a pretty good, an indicator of the potential for that to get permitted.
Well, I'm assuming the road route's being selected. I assume it's got some zigs and zags in it that are going to be useful for the native corporation as well. I mean, they've got their own reasons, but yeah, I don't think there's any question it's going to happen. It's just, permitting is permitting. You gotta go through the process.
Yeah, certainly. Yeah, certainly.
But I don't think I think the odds of a bad outcome are pretty low.
Exactly. I'm not going to get you to comment too much on the oil deals, Eric. I figure those are not really up your angle more than your compatriot there.
Those are get Keith on to wax poetic about those.
But I do see some other familiar names. So let's run through some of those. Continental Gold, high grade down in Colombia. Do you follow that? I am following it somewhat. Obviously, I have my concerns about Colombia. Are you following CNL?
No, that one's one of Tommy's. I mean, it's I like the model and I like the resource. I just don't really have any visibility when it comes to permitting. So, I mean, that's one of those ones where I think I'd rather be late than early on. I'll wait for them to get the permitting done because it is. I don't understand the permitting process in Colombia.
Yeah, I guess what attracts me is, again, it goes back to the drill holes, Eric. I cannot ignore those kind of drill holes for very long. High grade tends to do that to me, but so yeah, I hear what you're saying about the permits. Silvercrest. Oh, sorry.
Well, the one thing they have going for them, I think, is it's a fairly active mining area, and that's a double-edged sword. I mean, obviously they've got to deal with the locals, and everybody's got to be happy with what they've got at the end of the day. But on the other hand, you're not dealing with a virgin area and you're not, they're not. That project isn't located in one of those high pompous areas where Colombia has recently passed some environmental laws to protect the water sources and stuff. They don't have any of those issues. It's one of those areas where there's a whole bunch of local miners and stuff, and they've got to get everybody on side in agreement, make sure everybody gets what they need out of the deal. So, I think their odds of getting permitted are reasonably good. I just don't know whether it's going to be 6 months or 3 years.
Got it. And you'll feel more comfortable once you see those permits moving forward.
Yeah, I'd rather be at this stage. I'd rather be on the other side of it.
Good. Okay. Silvercrest Metals. Is that one you follow?
It's definitely one I follow. I followed the original Silvercrest pretty much from inception. I'm pretty good friends with Eric Fear and Scott Drever and Barney Magnuson, the Three Musketeers that started Silvercrest, and they did what I thought was a very smart thing. I mean, in a very difficult market, they sat down and decided to do a merger with First Majestic. At the time, when I initially looked at it, I wasn't thrilled, but they walked me through the logic, and it made a lot of sense. I mean, it was the right time to do it. Their mind, they had had built, Santa Elena was going to be delivering very good numbers for the next 3 or 4 quarters. Doing the merger when they did would do them the most good, and it would do First Majestic the most good. And you can see that, I think the balance of power in the negotiations by the way that was done, because Eric always really liked this property, Las Chispas, that he had put into the original Silvercrest. And part of the deal with that property and a couple of others was spun out with $5 million into this new Silvercrest Metals, as opposed to Silvercrest Mines. Eric's now focused on that project. It's a pretty interesting, very high-grade silver project, but it also has zones that have quite high gold grades. It's never been drilled. It had about 100 million ounces of silver mined out of it, going up to like the Second World War. It was kind of classic Mexican pre-Depression, pre-World War II, where they mined down to the water table and stopped there. They've been working on opening up some of the old workings, cleaning those out so they can sample them properly. I think they start drilling. They might even be drilling now, but they start drilling fairly soon. The company's got, I think now, something like 30 million shares. I don't know, about 7 million in cash. It's trading really well. I mean, I think to know about the backing those guys have and the reputation they have, you just look at the chart. They did a 15-cent placement, which I'm happy to say I bought some of. The stock's trading at about 50 cents now. That placement became tradable today, which means the brokers could have started shorting it 2 weeks ago. You take a look at the chart, and that chart tells you there's not a lot of guys that want to get in the way of that. And the reason is, frankly, insiders bought a quarter of that placement, and a lot of the rest of it was bought by guys like me that follow them all the way through with the original Silvercrest. And I'm back on the jockey, and I'm quite happy to put my money down and see what Eric and Scott and Barney can come up with, because I'm pretty sure it'll be good.
I'm just pulling that chart up right now, Eric. That's SIL. Now, you said that had 30 million shares out and how much cash?
About 7, because there was 5 million was put into it when they did the spin out, and then they did another placement for I think it was about 2.5, or I think it might have been 3 million when it was all said and done.
So
they spent about $500,000 drill testing another project they have, House of Us, which I like that project, but they didn't. They were pretty straight up when they went to drill that. They said, "Look, this is a really big epithermal system. It's not that juicy at surface. We're going to try putting some holes in it. If we hit the bonanza zone, fine. If we don't, we move on." But they kept the property, but they've gone back to focusing on Las Chispas, which was really the main. That was always the main project.
So that gives you about a $15 million market value, almost half of that in cash.
Yeah.
Interesting. I'm going to do some homework on that one, Eric.
Do some homework on Eric Fear. I mean, he gives a pretty convincing presentation. I mean, I think he did a. Yeah, I was understating that. It's more like 40 million shares out, but it's still. Okay. I think they've got 7 million right now.
So about a third, even you could say, a cash.
Yeah.
Yeah.
More to the point, they don't need to do. They aren't going to need to do a financing for some time.
Okay. Erdene Resources. That's the one in outside of Turquoise Hill in Mongolia, isn't it?
Yeah, that's one that Tommy follows, but I'm kind of doing some homework on that one now. I mean, it looks pretty interesting. I mean, they've made a new discovery, and it's always exciting to see new discoveries. It's a sort of a classic looking epithermal system. Mongolia is one of those places that's got a lot of amazing geology that still has to be unlocked. I remember when my late brother Dave went over there 20 years ago, and he came back, and he just kind of shook his head and said, it's the freaking Carlin Trend. It's just nobody's drilled it yet. And I said, so that means we're going to jump all over Mongolia stocks? And he was like, well, no, they haven't decided what they want to be when they grow up yet. Let's let them do that first. And, BHP had the joy of working through that with the government of Mongolia, but it seems like they seem to be fairly pro-development. And certainly where Erdene is, there's nothing there. They're basically on the edge of the Gobi Desert, I believe. I don't think there's a habitation within 50 kilometers, so they don't have any social issues in that sense. One issue they and anyone else in that part of the world has, and I don't know what the
Okay. I'll do some. That's ERD is their symbol, Eric?
Yeah.
Okay. Arena Minerals. I believe I saw this one at your last subscriber summit when it was in Vancouver. They're a project generator, aren't they?
Yeah, it's one that both Tommy and I follow. I always liked the property package those guys had in Chile. They did a deal with SQM, which is it was government owned. It's private now. It's a Chilean mining company that has a huge land package through that porphyry belt. And they don't actually have it. The Chileans don't have it for the porphyry. They actually mine the near surface material for lithium, iodine, and a few other things. They're mining what's called the caliche, which is basically this secondary stuff on top of the hard rock. It's basically cemented. It's basically cemented overburden. It does a pretty good imitation of cement. And one of the drawbacks of having this caliche sitting on top of everything is it's very tough to use traditional geochemical and geophysical methods to pick things up. They tend to bounce off of this stuff, and you don't get a lot of leakage through it. So what they're doing, and they knew going into this that the issue they were going to have was to try to find these porphyry centers. You basically got to do what I described to my readers as playing Battleship. Like you may remember that kids game Battleship, where the other side could see the other side's ships, and you tell a guy where to put a peg down, and with luck you'd clip one of the ships, and then you'd have to figure out how the ship was sitting and how to put enough torpedoes in it to sink it. And they're basically doing something that isn't dissimilar right now. They have 3 joint venture partners, Jogmac Tech and B2, are all earning into parts of theirs. And what all of them are doing is essentially grid drilling on 2 or 3 kilometer centers. And all they're trying to do this phase is try to clip the edge of one of these porphyry systems. So, in all likelihood, I mean, there's always a chance they're going to get a luck and drill right down the throat of something. But the more realistic expectation at this point is that they'll hit, porphyritic alteration, or, maybe they'll hit some low grade copper over 10 or 20 meters, something to make them think they've clipped the edge of one of these systems. They still won't know where the center is. They'll have to kind of keep tightening up the grid. And that was, as much as I like the ground, that was kind of scary for a junior, but I started following after they did these 3 JV agreements, because collectively those 3 companies are probably going to spend, I would think, in the order of $15 million drilling this year. There'll be 400 or 500 holes drilled on these projects by the end of the year.
Wow, that's a lot of drilling. Yeah. Holy moly.
Yeah, I mean, they're not deep, right? I mean, all they're trying to do is get through this caliche and say,
how thick is that? How thick is that, Eric?
I think on average it's 30 or 40 meters. So the average hole is probably, like, let's say 100 meters. Like, all they're trying to do is get 10 or 20 meters into the bedrock and just see, like, are we seeing the right alteration? Are we seeing any copper? Then you just move on to the next one. So they pop these holes off pretty quick. It's all RC drilling.
Okay. Eric, I'm glad you brought that one, that you presented that one like you did, because I think that as investors in this space, we're not going to be looking for those hot stock plays as much as a hot exploration play. And sometimes that means that you have to look at things from a different perspective and look at things in a rational way and allow the time for the company to do what they have and pay attention along the way. This is called rational investing. And the way you were presenting it now, I think, enables someone to be rational about the way they follow that company. Another one you had, I think this one, Morian Resources, I believe they were also in Vancouver, and they're a prospect generator as well, aren't they?
They're, prospect generator / royalty company. That's one.
Oh,
I didn't have much time to talk to them when they were in Vancouver. I spent some more time with them in Toronto. It's one that Tommy follows, but it's kind of an interesting deal. I got to sit down and I'll probably get on the phone with them and get them to walk me through the numbers. But their main royalty right now is a coal mine. I think there's 2 of them actually, mines in Nova Scotia. And normally these days you think coal mines, you just kind of run in the other direction.
You know who talked? James Qantas was on the show about a couple of weeks ago, and this is one that he talked about.
Yeah, well, and it sounds like, I mean, they have a very low valuation. walk me through how their royalty structure works. And they should be getting a very good payout from this, and because they're dealing with fairly efficient mining methods, and I think they've got I think essentially all the output. I mean, they're just collecting royalties. I think essentially all the output is earmarked for local, like very local, like Nova Scotia and maybe Northwest U.S. Power generators. The company mining it seems to be very comfortable that they're going to get their sales price. I mean, they've got a lot of it forward sold already. It's a pretty interesting deal. I need to sit down and get my head around the numbers.
Yeah,
but the guy was pretty convincing, and one of the most convincing things about them was they really weren't trying to sell anybody. It was like, here's the numbers. They're pretty good. Like it, hate it, we don't care, whatever.
Take a look. Take a look. Well, I like those pictures. I'm going to take a look then. Hey, Nevson was also at your conference. They're in Eritrea. I think they've had some learning teething pains there as well. What's been going on there lately, Eric?
Yeah, I mean, things have gone very well from day one on the mine site and in country. I mean, the issue they've always had, and they've always known it was going to be an issue. The government of Eritrea is not the most popular in the world, to put it politely.
Mm-hmm.
It's basically run by a bunch of revolutionaries, the guys that fought a guerrilla war for 30 years and eventually got Eritrea to split off from Ethiopia. Those guys are still running the country, and like revolutionaries everywhere, they've got pretty firm ideas about how things should be. I'm of the opinion that it's at the end of the day, you're more likely to be able to change these things from the inside. And by that, I'm saying, a company like Nevsun paying better than average wages, better than average working conditions, making sure there's local health care, basically doing what it can from the inside, just try to make the place work is, at the end of the day, is more likely to help than running away from it. I mean, the mine itself, Bisha, is an extraordinarily successful mine. It's arguably the best base metal mine in the world. Their timing was incredibly lucky, I have to say, and they would tell you that themselves. I mean, Bisha is a big VMS deposit because of the way it oxidized. When it was undisturbed before they started mining, it had this very high-grade gold cap on top of it. And then you went down into the supergene zone, which was basically above the water table, where most of the zinc was leached out and the copper was upgraded, so it was like 4 or 5% copper. They're just now getting into below the water table, into the area where you're getting into the, not low-grade, but lower-grade copper, so 1.5%, but higher-grade zinc. So they started out as a gold mine for about a year and a half, right at the top of the gold prices. Then they were a copper mine for 3 years, right at the top of the copper prices. And now, going towards the end of this year, they'll transition to being probably 60 or 70%, 60 I think, percent zinc by revenue and about 40% copper and a bit of gold, just as hopefully the zinc prices take off. They're trading for, I think right now they're trading about $4.50. They paid 4 cents US a year quarterly, so 16 cents a year US in dividends. So the dividend yield's not that shabby. And they've accumulated about, I'm going to use Canadian here, their Canadian market cap right now is about 900 million. They got about 200 million shares out. They've probably got something like 650 million in working capital. And that's cash.
Wow.
They're basically, I've heard through the grapevine, I've never been able to get the company to confirm this. I've heard through the grapevine that a couple of their big shareholders told them for about 3 years, the mining market stinks. Things are just going to get cheaper. Don't go out and buy anything yet. Like, just wait for things to get cheaper. I've heard that they've been sort of given the green light to get serious about M&A. They wouldn't confirm that, but I heard that from third-party sources. So they're out looking fairly hard. It's hard to top Bisha, but I think they're looking for a transaction. But the other thing to keep in mind is if zinc has the move, I hope it starts having towards the end of this year, and they continue to be this profitable and continue piling up cash, the day is going to come when they're going to be in somebody's sights themselves. Because even if you don't like Eritrea, if you're not comfortable with the politics, it's getting to the point where 2/3 plus of the price you're paying paying for the company is cash sitting in the Cayman Islands. So
Yeah. Wow.
that kind of cuts your risk down.
Yeah, big time. We got two more here to work through, Eric. One's Platinum Group Metals. They're, what do you follow that one, and what do they got going on these
I
days?
don't follow it, but it's one that I may start. I mean, it's one that those guys have done a great job getting that thing all the way through to production. I mean, I've been promoted on it by management several times over the last, God, I don't know, 10 years. It was one of those ones where it was always, tomorrow. There was always more dilution ahead of it. I think the first mine is built now, so they're hopefully at the end of that. It's had a really nice move in the last couple of months as platinum and palladium have to some extent been following gold higher. They haven't been as strong as gold. I mean, I think the real gem in that company is their second project, which is, I'm guessing here because I don't follow it, but 2 or 3 years from development, say that's Waterberg, and Waterberg, like their existing project and most of the platinum mines in the world it's in the Bushveld complex in South Africa, but their other deposit, Waterberg, has got very impressive grades, but it also has very impressive thicknesses, and that's something you don't usually see. Most of these mines are close to horizontal beds. You're dealing with 1 or 2 meter thicknesses. It's not the easiest stuff in the world to mine, or it's not the cheapest stuff in the world. It's very labor intensive. That's one of the reasons why there was expectations for a higher platinum price, because the average cash cost for the platinum sector as a whole is probably right about where platinum's trading these days. But this other deposit, there's Waterberg. That's very impressive. I mean, it's several times thicker and it's higher grade. I mean, that thing's going to be a cash cow when it goes into production.
Okay. Well, for those that are looking for platinum plays, that's one to look at. I also noticed the chart while you were talking there, Eric. I pulled it up, and I saw that change of trend in February there. So I'm going to keep an eye on that one. And I'm seeing a new name here that I haven't seen before. This will be the last one out of your presenting companies from the Subscriber Summit, is Gold Rock. What's their story, Eric?
Gold Rock is a company that's got a gold deposit in Argentina. I mean, I knew of the deposit because I knew you may remember a company called Mansfield Resources.
Yes.
Do you know the Lease brothers?
No,
John
but I
Gord?
certainly remember the play.
Well, John and Gord started Mansfield. They were pretty early into Argentina, earlier than a lot of other guys.
Yeah, back when Yamana was exploring there.
Yeah, and they were involved in a couple of discoveries. One of them was Lindero, which is a project Gold Rock has. Another one was called Rio Grande, which is in a company called Regulus now. The Lease brothers did a great job advancing this thing, but they ran into the same roadblock everybody in Argentina did 4 years ago.
Yeah.
And that was the
change of government.
The lady running the country into the ground. And the politics just got untenable. I mean, the government brought in all kinds of capital controls because they were trying to maintain an unrealistic exchange rate. They put in an export tax on Doré. I mean, it was just one thing after another.
They took over the deposit, the oil play that was owned by Repsol.
Yeah, so it just got to the point where the place was just a pariah. Like big mining companies and big investment houses just were not willing to put money into it.
Kind of broke my heart a little bit, Eric, because that was sort of one of the countries in South America that I actually felt comfortable enough going into. I thought it was like Peru and Chile. So yeah, it was.
Well, and I think it is. I think it was a temporary. I hope a temporary aberration with the government at the time. And what happened during sort of the early part of this period, I think John and Gord Leask were just getting tired of butting their heads against the wall, and they had some of their own stuff in Nevada that they wanted to play with. So they had a new guy come in, and the new guy I think is fairly well known to most people, especially people that follow Liz, since he's certainly intimately involved in that one.
Mm-hmm.
And that's Paul Matizik.
Okay.
Paul's history is one of getting in early on I guess commodity plays, if you will, building value and doing a very good job at getting the market to pay up for those projects at the end. If you look back at his history, there's Energy Metals was one of his deals. Potash 1 was one of his deals. Lithium 1, back before the rest of the world was really paying much attention to lithium, was one of his deals. All three of those deals were taken over at substantial premiums to where he started working on them. Multiples of multiples. I think those three companies together, the takeover value was in the order of $2.5 billion. He told me, he and I talked about this. He had talked to me about this project, and I knew Lindero from the Lease brothers, and he said, I made the decision that I wanted a gold project. I wanted it to be heap leach because I didn't want to be dealing with $500 million capex. I wanted something that I thought would be financeable at the end of the day. And he was earlier on that concept than a lot of people were. But still, having done that, he couldn't get past the Argentina issue. One thing he did do during that period, though, was he got the pre-feasibility and the feasibility done. He got the permitting done. He raised money 2 or 3 times at about twice the market price in all 3 occasions, brought in some strong shareholders. He's now got a feasibility study. The politics have changed. There's a much better government that's very pro-business running Argentina now. And I picked up on this stock about a month ago at about 27 cents. And I looked at it there. The new feasibility study they put out generates about 110,000 ounces a year gold production. After-tax IRR is about 26%. CapEx is about $150 million. I mean, to me, it basically looked doable.
Mm-hmm.
I think they're going to get some additional help. Well, they get additional help from the gold price that keeps going up, obviously. But I think they'll get some additional help on the currency side. They did that feasibility study assuming 9.5 Argentinian dollars to the U.S. dollar. The actual ratio right now is about 14.5.
Mm-hmm.
So I think their OPEX will probably come down. But more to the point, I've seen Paul take this kind of a project in the right market, get behind it, and really build value and really build market support. And that's what I think he's going to do here, pure and simple.
Well, yeah, I think that's a great note to end the show on, Eric. He gave us a really good one there for us to go and do our homework on. A Paul Matiscik deal. Argentina is a good, definitely good for geology. 150 million market cap. CapEx cost. That all sounds really interesting. I'm starting to look at more Argentina stuff. Mirasol.
I love Argentina. The problem was just political.
Exactly.
Years. I mean, geologically, the place it's awesome.
Oh, totally. And so now that they have done the change of government, Mirasol has improved quite significantly.
Yeah.
And so I'm starting to look at Argentina plays, and I'm definitely going to do some more homework on this Gold Rock. What's their symbol, Eric? Do you know?
It's GRM.
GRM. What is that?
I don't know if it occurred to Paul that sounds out as grim, but that was probably an accident. Maybe it wasn't because it was right after the election he took it over, so maybe it wasn't an accident.
There you go. Or maybe it's grams of gold there. Well, there you go. Well, on that note, Eric, I think we should wrap things up. We've been at it for about an hour now. I think we talked about a ton of companies, so I don't think there's any problem with the time. Folks can use that pause button every once in a while and go get some coffee and come back. Thanks a lot for coming on, Eric.
Oh, thanks for having me again, Alan, and thanks for letting me be incognito so they can just stare at your handsome face for the whole hour.
You know what? I didn't make them stare at my handsome face. I've been having this screen share on the old time, and as you've been talking about this stuff, Eric, I've been kind of letting them enjoy my homework. I've been opening up some websites and looking at charts and stuff while you were talking, so I think it worked out real good.
Sounds good.
Awesome. Well, we're going to have you on again. I want to make this a regular part of the show, Eric, getting other market commentators on to tell us what they think. And I want to pitch your website. Folks, if you are in the business and looking at investing in this space, I have to give an endorsement to Eric's website and the work that he does. He and we are out there every day in the trenches looking at news releases, looking at companies. You cannot reproduce his efforts for cheaper and get a better filter. And I highly recommend you go see Hard Rock Advisory. He even has a reasonably priced, what's your deal, Eric, on the intro if someone wants to check it out?
If you want to check it out, the best way to do that is there's always a link on the homepage to download an issue or download a report or whatever. And there's always a link in that report where if you sign up for the journal, the first 3 months is $9 and you get to test drive it.
And they can find that at hraadvisory.com. Just go to the main page there, and you got to check out Eric's work. I've been following Eric for a long time. There's a reason I invited him on the show, and I believe very strongly in the work that he does, and I think you should try out his stuff. So on that note, Eric, thanks again, and we'll get you on soon.
Thanks. Sounds good, Alan.
I'm just going to wrap things up. On that note, I want to say thank you to my guests, obviously, my viewers and my sponsors. All of you make these shows possible. Thank you very much. I got to stress, before making any investment decisions, it's important for you to do your homework and speak with your financial advisors. On that note, you have a great day, and we will talk to you soon.